Hey everyone, and welcome. If you're gearing up for your tax law exams, you are in exactly the right spot. We're about to tackle one of the most fundamental distinctions you'll ever face: the razor-thin, high-stakes line between tax evasion and tax avoidance. Nailing this is non-negotiable, so let's get you prepped. So that's the big question, right? When does smart financial planning cross over into a federal crime? It's a critical line. On one side, you've got legal, strategic planning. On the other, you're looking at serious criminal charges. Understanding where that line is drawn isn't just for your exams, it's foundational for your entire legal career.
Here's how we're going to break it all down. We'll start with the basic definitions. Then we'll get into intent. This is the absolute key. After that, a side-by-side comparison, a look at India's specific laws, some huge Supreme Court cases you have to know, and we'll wrap up with the real-world consequences and those tricky gray areas.
All right, first things first, we have to set the legal foundation. Before you can even think about analyzing a fact pattern or a statute, you've got to have these core definitions down cold. I mean, crystal clear. Every single legal argument you're going to build starts right here. So let's start with the big one: tax evasion. This is illegal. Full stop. It's a criminal act. The words you need to burn into your brain for your exam answers are deliberate, willful, and intentional. This is not an accident. It's an active, conscious choice to cheat the system using dishonest methods. So when you hear evasion, your mind should immediately go to fraud and concealment. Now, let's flip the coin to tax avoidance. This is, by definition, 100% legal. It's all about using the tax code exactly as it's written, leveraging all the deductions, exemptions, and yes, even the loopholes to minimize what you owe. The key difference here, it's all done in the open. It's about disclosure, not concealment. You're using the rules, not breaking them. Okay, section 2. And listen, if there's one single thing you remember from this entire session, make it this. The legal difference between evasion and avoidance almost always boils down to one word: intent. We're talking about mens rea, the guilty mind. It's what the prosecution has to prove, and it's what the courts will look for first. And this slide lays it out perfectly. With evasion, the intent is fraudulent. It's a deliberate act to deceive. With avoidance, the intent is strategic. You're just arranging your finances to take advantage of the law as written. You could say one is about hiding from the law, while the other is about using the map the law itself gave you. And here is a massive point for your exams. For a charge of tax evasion to stick, the prosecution carries a very heavy burden. They have to prove willfulness beyond a reasonable doubt. It's not enough to just show that tax wasn't paid. They have to prove that the person knew they were breaking the law and did it on purpose. That's a really high bar to clear. All right, let's put it all together now in a direct side-by-side comparison. Think of this next part as your ultimate cheat sheet. It's perfect for that last-minute review right before you head into the exam. So, here are the key differences laid out bare: legality, criminal versus legal; the nature, fraud versus strategy; disclosure, hiding information versus being transparent; and look at the penalties: prison for evasion versus maybe a challenge from the tax authorities for avoidance. But check out that last one, timing. This is so important. Evasion happens after a tax liability is already there. You're hiding it. Avoidance is about structuring things beforehand so that a lower liability is created in the first place. It's a subtle but critical distinction. So what does this look like in the real world? Well, here are some classic evasion tactics. A business owner taking cash payments and just not ringing them up, keeping it off the books; making up fake receipts for business expenses; hiding money in a secret offshore account; or trying to claim that your family trip to Goa was a business trip. You see the pattern? It's all about active, willful deception. Now, let's contrast that with avoidance: contributing to your national pension scheme, or NPS; donating to a registered charity and claiming a deduction under Section 80G; investing in tax-free government bonds. These aren't sneaky tricks. In fact, these are things the government wants you to do. They put these provisions in the law to encourage saving, charitable giving, and investment. Okay, we've got the concepts down. Now it's time to get into the black and white letter of the law. You're going to want to know these specific statutes and sections for your exams, because citing them is what separates a good answer from a great one. So the government's response to these two things is completely different. For evasion, they bring out the heavy artillery: criminal prosecution under the Income Tax Act. The key weapon here is Section 276C. For avoidance, especially the really aggressive kind, the approach is administrative. The big tool they use is GAR, the General Anti-Avoidance Rule, which lets them shut down arrangements that have no real commercial purpose other than to get a tax benefit.
And just how serious is Section 276C? Well, take a look. If the tax you tried to evade is more than 25 lakh rupees, you're looking at rigorous imprisonment for up to 7 years, plus a fine. Even for smaller amounts, it's a minimum of 3 months behind bars. This is not just a financial penalty. We're talking about serious jail time.
And if prison time isn't scary enough, look at this number. Under Section 270A, on top of paying the tax you owe, and on top of any potential jail sentence, you can be hit with a penalty of up to 200% of the tax you tried to hide. It's designed to be a massive financial blow. So, with penalties like that, you better believe the courts have had a lot to say about where the line is drawn. This brings us to the judiciary. The statutes give us the rules, but it's the landmark Supreme Court cases that show us how those rules are applied in the real world. For your exams, knowing this case law is absolutely essential.
And this right here, this quote from the famous McDowell case, is pretty much the Magna Carta of tax planning in India. The Supreme Court said it loud and clear. Everyone has the right to arrange their finances to legally minimize their tax bill. This is the bedrock principle that makes tax avoidance legitimate.
But, and this is a huge but, the McDowell case also gave us a crucial test, the business purpose doctrine. It says that any arrangement you make has to have a real commercial reason for existing, something more than just saving on tax. If a transaction has no economic substance and its only goal is to dodge taxes, the courts can throw it out. Then we have the massive Vodafone case. The court doubled down, saying that just wanting to save tax doesn't automatically make a deal illegal. But this case was so big, so complex, that it actually led to a direct change in the law. The government's response to the Vodafone ruling was to introduce GAR, giving them a new, powerful tool to fight these kinds of highly sophisticated tax avoidance schemes. Okay, let's wrap this up by looking at the practical realities, what actually happens, and where things get a bit messy and aren't so black and white. This chart really tells the whole story, doesn't it? The outcomes are completely different. For evasion, you're looking at severe criminal penalties, prison, massive fines. For avoidance, the consequences are civil. You might have to pay the tax after all, or have your arrangement challenged under GAR, but you're not facing a criminal conviction. And this brings us to the ultimate legal minefield, the gray area. This is so important. A scheme that might look like aggressive tax avoidance can be challenged. And if a court decides it's a complete sham with no real business purpose, and that its true intent was fraudulent, they can reclassify it as tax evasion. That's how a civil matter can suddenly become a criminal one. So we end with the question that's at the very heart of this debate. We know that tax avoidance follows the letter of the law, while evasion violates its spirit. But what about those super aggressive schemes that follow the letter to the T, but seem to just mock the spirit of the law? As a future lawyer, that's the question you'll have to grapple with. Where exactly do you draw the line?